Good afternoon, everybody, and welcome. I'm Nicole Sienna, the host of today's webinar. Thank you for joining us on this snowy day. We're hearing from Loyalist Exploration, a Timmins-focused exploration and development company. Now, they've been at it for a year, but really the last 3 months have been extraordinary. Loyalist has quickly built a 4-project portfolio in one of Canada's most productive gold districts. They've strengthened their team and raised capital to support its growth plans. So joining me here today is Errol, Farr, CEO, and Michael Stewart, advisor to the company. They together are going to share recent progress, upcoming plans, market outlook, and we're going to have a live Q&A after we're all done here today as well. I'm going to leave it to the two of them to come on screen. They're going to share their deck. And everybody who's live on the line today as well, don't forget that there's the comment section over to the side of your screen. Any questions for the team here, please just drop them in there. And when I come back, we'll get into them.
Thank you, everybody, for coming. It's our pleasure to present Loyalist Exploration today. Loyalist started about 6 years ago. It was founded in Timmins by Timmins shareholders. The purpose at that point in time was some exploration in Papua New Guinea. And after a good try there, we brought it back. A year ago, we decided to go back to Timmins. Timmins fell into our laps somewhat fortuitously because of a number of people that we knew. But we are a Timmins-focused exploration, development, and production company. Timmins is important to us because of it's probably the best place to work, certainly in Canada, in my opinion, possibly in the world. It's got an incredible mineral endowment. It's got a history of mining that goes back more than 100 years. Gold, base metals, it's home of 4 of the largest or well-placed mining companies in Canada, and a mineral endowment that's second to none. The people have been mining, as we said, for over 100 years. It's 6 hours from Toronto, and you can drive to every one of our projects within 20 minutes of a local hotel. That's why Timmins is what it is. In February 2025, we acquired 2 projects, Loveland and Gold Rush. In March 2025, an inbound call brought us Tully. And in November 2025, we acquired DeSantis. Tully was closed on October 2nd. DeSantis is still pending. It's been a wild ride in a year, and it's been an exceptionally wild ride in the last 3 months. Purpose. We kind of talked about that already. 80 million ounces of gold have been pulled out of Timmins in the last 100 years. There's 20 million known reserves of gold, probably a lot more to go. It's home of Kidd Creek, probably one of the world's deepest base metal mines. And to invest in Timmins is to invest in Loyalists. Actually, the other way around. Invest in Loyalist is to invest in Timmins. Our mission is to create the greatest asset base in the Timmins camp and take it all to production. Loyalist has acquired 4 exceptionally good mineral projects that create almost a golden circle around Timmins. We've acquired a recent project, DeSantis, along the Porcupine-Destor Fault. And we think we're certainly, with Tully, a near-term production. Our flagship project is the Tully project near Kidd Creek to the north of Timmins. We have 144,000 ounces in a historic resource. It's subject to a previous PEA and production scenario, and there's been plus $20 million worth of drilling on the property. It's ready for permitting, ready for production. The economics back in 2010 were exciting. With $4,600 US gold today, the economics are even more exciting. DeSantis, we signed an agreement to acquire that in December. It has a historic resource of 50,000 ounces. It has historic production in the 1930s, and it's located right on the Porcupine-Destor Fault, which is like a Park Avenue, New York address. Loveland sits just west of Canada Nickel, one of the major projects in Canada today. We have very good grades relative to Canada Nickel, and a large land package that could fit well in the future of the nickel camp of Canada. It also has plus 10 grams gold discovery that was made in 2013, and we would like to follow that up with exploration in the near future. Gold Rush completes our package. It's to the west of Timmins in a sort of a little known area of gold resources, but it has some excellent drilling, historical drilling and grab samples, and is a great future exploration program. We acquired all 4 programs for $900,000 cash in the last year. We used our shares and leverage to continue to acquire those. These are just 4 excellent projects. I'm going to let you jump in there a little bit, Mike.
Sure. You alluded to just how we used a share price, but we also used cash. And so 900,000, as Errol said here, for these three properties. And the raise that we did in 2025 was a series of tranches totaling $1.3 million. When I showed up to this company, it was $1 million market cap company halfway through the year. And when we closed Tully on the 2nd of October, which was the final project that we had closed on, we touched on a $15 million market cap. So we took $1 million market cap company, put $1.3 million from the public markets, and turned that into 15. It touched closer to 18 million here yesterday again. So we've utilized the share price and also the return on capital to augment a market cap. I think you have to do that in this case, but you also, the very best starting point is probably at $1 million market cap company. We're mimicking what the recent larger mining companies have done, is they've stuffed these big properties into, let's call them junior producers, and everybody's making off like hay. So the focus of the company at the top of the sheet here is the Tully, and it's going to go through a couple of stages here, and Errol will speak to that. DeSantis was, we couldn't say no to this project. It was inbound in the fall, and we worked on it for a couple of months, and finally got a news release on it on the 1st of December. This is an exciting piece right on the Destor Porcupine, and it's right next up to Galleon there, and during that time frame they picked up $31 million from Pan American Silver. Loveland came from Stellar Gold, the former Moneta Porcupine, and so this is a base metals property with the gold showings, as Errol alluded to. Gold Rush is the option, and so we think that we've got a suite of properties here. Everything's a little bit different, but it is in the Timmins camp, and it created our Buy Timmins strategy, which is that hashtag Buy Timmins. And we think that the max value is to focus completely on a mining camp that is touching 100 million ounces here in its history.
This is what Timmins looks like on a map. You've got Glencore, which is Kid Creek, go west just north of Tully. McEwen Mining, Canada Nickel, Discovery Silver, Pan American Silver, Galleon Gold, and there's more that we can't identify here. We're surrounding all of that with Tully, Loveland, Gold Rush, and DeSantis. This is an exciting place to be. Tully, it's not often in your career that you get offered a deposit like Tully. It's well defined. It's clean, nice, simple, straightforward deposit. It sits as a cuboid. The orange piece on the map here. It's sitting in a volcanic tuff sandwiched between two other rock types. It's nice and clean, easy to mine. We anticipate. Well, we're going to immediately start the permitting process, updating our 43-101, updating a preliminary economic assessment, and designing a ramp to go into production. The economics of this are compelling. We just need to work at it and prove it. Grades, 144,000 ounces in the 8 grams per ton area, indicated and inferred already historically. We think that will increase significantly with the change in gold price. That historic result was done at $1,200 gold, and we're sitting at $4,600 today. This is the foundation of the company because it cash flows soon. We estimate in probably 2 years, we'll have permits, and the capex is relatively small, estimated at $50 million. So it's a project that a company like Loyalist can put into production and get to cash flow. We talked about DeSantis. Again, DeSantis was in production in the 1930s, 1940s, produced 200,000 tons at at 6 grams per ton. It has a shaft that was rehabilitated in the 1980s. It's got gold zones already defined and needs ongoing work to update the resource estimate at depth. One of the interesting postulations that we're exploring is in the 30s, miners were looking for ounces per ton at surface or near surface. Nobody was looking at grams per ton. And in today's gold environment, there may be a significant surface type endowment of a resource, and we'll look at that early in the new year here. Loveland was one of my first projects that I got to see here, acquired from Stellar Gold. It's got almost 500,000 tons of nickel copper in the 1.2% equivalent, drilled in the 1970s by Kamenko and Hollinger, drilled in the 2010 range by Amador, and that resource was never updated. So it's got a significant potential for nickel copper. Just at the end of the drill program by Amador in 2013, they hit a significant intercept, 3 significant intercepts of gold at 400 meters deep. And while they were doing that, they found 11 grams gold at surface, just 400 meters south of that drill core. That's never been followed up. Those are compelling numbers. We intend to follow that up. So Loveland becomes a gold and separately nickel copper project. It's significant in size and located just to the west of Canada Nickel's Crawford project. We hope that Loveland will become a significant addition to the nickel story of Timmins that's going to happen over the next decade. Here we see significant geophysical targets on just a small portion of the Loveland property. There's 31 targets here that have never been followed up that sit just to the north and east of the Cominco and Hollinger zones. Again, Gold Rush to the west of Timmins has, best drill assays of 2 grams per ton and 11 grams silver, and some significant high-grade grab samples. Very underexplored property, and lots of potential for a future gold resources. Jump into that.
Yep.
Now?
So capital structure here, this company, let's get always the question out first here, and I'll have the answer at the end. Right now we've got about 397 million shares outstanding. We've got a market cap here that's been 15 to almost $18 million in the last 48 hours. We've got a share price of 4.5 cents here, and that's a 52-week high. And so we've got a financing out at 4 cents here right now. It's now a discount. We brought it out as a premium finance as we did the last one on to close for Tully. So, we've taken this, we had to get the money in over the summertime. We were very good at doing what we had to do. And so now, the rubber meets the pavement. So we have to look at this capital structure table and say, okay, I'll just go back a little bit. People always ask about a rollback in this case. Well, our biggest peer that's in the camp is Tony McCooch under Discovery Silver. And if I'm pretty close to it, it's 850 million shares outstanding or thereabouts. This is a company that has seen 3 times its growth just by what they've been executing here since June. So, we do have a lot of shares outstanding in that sense, but when we take a look at the ownership here, we've got about 72% in total that represents the insiders and the very close persons known to the insiders. I call it a dozen sets of hands. And so these are the people that have backstopped this company on the heavy trading days back in the summer and right around the close on Tully at $710,000 when we closed that in October. The other parts of it is we've got Fulcrum, a company based, London-based listing company that brought us Tully. It was an inbound call to the company. They thought their value in this company was paper, so they took 20% of the company, and we gave them $500,000 Canadian. So they won significantly. They had a turn on their money up 8x when they closed on this deal when it was priced originally. So everybody's sort of happy here on the reset of this company that came back to Timmins, tail between the legs out of Papua New Guinea. And so this has been a very good start. The last 3 months have been the most interesting part I've ever seen in junior mining myself. And so we've got good structure in the sense that we've got about 92% of friendly stock. And you've seen this in the last 48 hours where stock has dried up on the market here. So this live financing will entice people to come into the financing. And going forward, we're going to have to figure out what we want to do here for liquidity. I can say this. And this is public, we've got at 7 cents and 5 cent warrants out there, we've got about $10 million in Canadian currency, all in friendly hands. So we've got access to capital here just by internals, and we'll keep financing going into the ground, obviously, with flow through. We'll use that flow through mechanism as it's the best way to raise money. We've got critical flow through on Loveland, and the rest are all gold projects. With a silver exposure, also on DeSantis, it's historically about 10%. So I'm going off the ownership structure here, but these two things are very close together on how we've been able to execute and use the extravagance of this capital structure.
Our team. You got me, for good or bad. You've got Ashley Naden, Chief Financial Officer. She's Chief Financial Officer of a number of different public companies. Directors, independent directors, Michael Caccia, CPA, been in the mining business for 40 years. Bob Breezy was the project manager of Tully in the 2010 era. He knows the project extremely well. He's one of my first advisors that loved Tully, and he is absolutely dying to put this into production. And then we have David Drinkwater. David Drinkwater has an extraordinary career in mining. He's a former lawyer, ex-Hollinger director, ex-director of a number of different companies. And we expect a lot from him. He just joined the board again last month. And so that's our independent directors. We have John Roy. John Roy is a longtime Timmins resident, probably all his life. He's the shareholder representative in Timmins and was essential in the discovery of the Detour mine. Kevin Filo, a resident geologist, Burks Bovaird, and Steve Balch. Steve's VP Exploration for Canada Nickel, and Steve is responsible for me coming on to Loyalist. So a great team so far. We're going to continue to build that team as we move forward.
And a great pitch it is. We're going to get into some Q&A now, guys. Again, for everyone live on the screen, put your questions into the comment box. If you are watching the replay, you can also go to the Loyalist website and fill out their contact form and get in touch with them directly. So the conversation doesn't need to end here. The first thing I want to talk about is your core strategy. It's all Timmins, Timmins, Timmins. So my question for you really is, why now? A lot of this came from inbounds. What's the market missing? Where's the opportunity?
Timmins actually picked me. I don't know why, but they did. And, it's just a natural sort of flow. But why Timmins? Again, if you continue to look at it and talk about it, there is so much mineral endowment within a 30-kilometer radius, let alone a 100-kilometer radius, that you can't not do mining in Timmins. And I don't know that there's any other location like it.
Right. And, to your point, you can't not do mining in Timmins. There must have been some criteria to the projects you've picked up this year. What is the strategy, and does that flow through to potential future land packages that you might have your eyes on?
We sort of saw the gold market. Well, the gold market in 2024 was bubbling, increasing beyond where it had been for years. And Gold Rush probably was the very first one. And, it just had great gold intercepts, and I jumped at it. Loveland, the criteria was a press release that was sent to me by Stellar Gold that had consolidated this property. I knew about Canada Nickel and its endowment. Loveland was right beside it. How do you not pick up a property like that? And then when you saw the gold assays, it just made it even more compelling. Tully is a once-in-a-lifetime acquisition for someone like me. You get production-ready ounces in a gold environment that's going absolutely crazy. That's cash flow. My history is running what I call the smallest open pit gold mine in Canada, in Newfoundland. So I'm attuned to this type of an operation. And this type of deposit is ripe for the picking for companies like Loyalist. DeSantis was location, 100% location, and historic production.
I'm hearing a lot of positives. Is there one value driver that you kind of have at the forefront for the next 12 months?
It's building the resources and building a production scenario for Tully. That'll drive everything.
Okay. I'm going to bounce around a little bit here. There's some questions coming in from the live chat. Benjamin, can you, if you can turn 900,000 into 18 million, what will you do with the next 10 million?
Oh, 10 million? You're asking a loaded question there. We're going to turn it into production. And production, just use a number of 50,000 ounces. 50,000 ounces a year for 8 years, 7 years, whatever it is an incredible amount of cash flow relative to the $20 million market cap that we have today.
Mm-hmm. Okay. Going back to Tully for a quick second, we know that it has a historical resource. It's maybe not massive, but what is a realistic path to scale? And what evidence do you have that the system can grow materially?
We've done some internal work already that points to scale within the envelope that has already been explored and that constitutes the existing resource estimate, historical estimate. There's drill results to the east and west and at depth that are compelling. Mm-hmm. We know that the deposit exists within a rock type that is easily defined. And as we called it, a cuboid. Took me forever to figure out that term, but it's easy to follow and easy to find the additional resources. What also makes it compelling is Timmins is known to run deep. Most of the big mines run to 2,000 meters. We've only scratched the surface at 300. So there's, if you extrapolate that potential, Tully becomes a major deposit in the Timmins district.
A follow-up from Dwayne, any approximation of drill meters for this year?
I would give no approximation for drill meters of this year. Our first and foremost exercise is to define the resource that exists today, define the PEA and get those economics in place. From that, we're going to continue to learn more about the deposit, learn more about how the geology works, and from that, we'll define a future drill program. And drilling is not the key to this, not today. Drilling may be the key to it in the future, but it's not the key today. I hope to drill, but I don't want to give a number in an expectation.
I think that's very fair. Yeah. Sorry, Michael, go ahead.
If I can add to that, I mean, part of my role here is to uncover things. And so we're uncovering paperwork. We're uncovering drill core. We're uncovering all these sorts of things that can bring things closer in. Certainly not conceptually, but it's just to get an idea. We've only had these properties for a number of months here. Mm-hmm. This will be our first upcoming season as a full season. And we've been hand to mouth from then till now. And so we still will be hand to mouth in a sense, but I mean, it takes a tremendous amount of money to promise drill campaigns. And it's too early. We don't have the necessary targets, etc. We don't have them at the snap of our fingers. We're uncovering, for instance, details of these properties that paperwork's never been in the wild. Mm-hmm. So it has tremendous value to open things up here. It's like a numbers matching Hemi Cuda, and you've got the engine sitting somewhere, and somebody gives it to you. And so it's like I said, the last 3 months have just been a wild ride because of these properties.
It's like the toy box at Swiss Chalet when you had 5 kids wanting it all at the same time. There was tremendous value in pulling out those toys because it kept them quiet for another hour.
And the irony about this Buy Timmins strategy, #Buy Timmins. You'll see it on Twitter. You'll see it on CEO.ca. I'll plug that one there for the boys. But here's the deal: is there's inbound calls. Had one yesterday a follow-up New Year's call. And so there's very little outbound calls. There's some inquiries outbound, but I mean, we're getting some inbound calls here, and we're going to be parking ourselves more strategically, and that's by moving our own goods, what we have here, to a caliber. We're only a $15 or $18 million market cap, whatever day now. We've worked hard at taking that from $1 million to this with no money. That's just by daylighting the properties that this is what Timmins can deliver.
Right.
And it's there's so much opportunity there. It's not funny.
It's kind of the beauty of having so much extensive historical information that you can base yourself off of for all of this. So, another question coming in from Andrew: if you are successful over the next 12 months or even 24 months, what will that look like for the company? Do you want to be a micro or a small producer?
Absolutely. That is the premise, that we will be in production within that time period. It's what makes sense. It drives cash flow. It drives value.
Dwayne, any hints on more properties coming in?
Nice
The question we all want answered.
No hints.
Not even.
Sorry.
But we're laughing.
No blink twice, eh?
Good, yeah.
So your properties, they're gold, they're strategic metals. How sensitive is your overall plan to the price of gold right now? What changes if it pulls back, if anything?
I don't think anything changes. The historic PEA was extremely positive at $1,200 gold. I don't think we're pulling back that far ever. So yeah, obviously a pullback affects profitability overall, but it doesn't affect an investment decision.
Okay. I'm going to flip over to nickel for a second. We know that it's been weak, but the last month has been looking pretty good, right? So on top of the metal doing well, you guys also have Loveland, which has the jurisdiction benefit of being next to Canada Nickel's Crawford, which is really exciting. And then you also have somebody from Canada Nickel as part of your advisory board. So looking at that whole picture, what are you and your advisors seeing in terms of Loveland itself? Is it a core asset, or are we looking at a longer dated option, perhaps?
Oh, it's absolutely a core asset. It's how do we approach it? We, acquired it in April, but we have not spent a lot of time digging into the historic data to date. It's a large project or large property with a lot of targets already, and so it needs to be approached methodically and carefully. And we're going to take a good stab at it this year with respect to looking at the data and doing some surface work and maybe geophysics, soil geochemistry, that sort of thing. Drilling's expensive. We want to do that when it makes economic sense for this company.
If you look at drilling, we've brought in a fold of properties with probably close to 300,000 meters drilled combined. So, you're not supposed to value a junior mining company with in situ values, although I quite often do myself, but you're supposed to value them from sunk cost. And so the sunk cost of drilling on these 4 projects, it would approach a 3 handle, and that's 300,000 meters. So we've got a lot of data to go through, and interpretations from 100 years ago and more. Mm-hmm. So this is a fresh look, fresh sets of eyes. Yes, we're close to probably the next company to go into production with Canada Nickel in Timmins. That's an exciting time for Canada and for nickel and for the team there. So they've built this company through COVID, basically. So and this will be good for us too, I think, if we're in the neighborhood.
Right.
So we certainly are in that neighborhood.
A question coming in from Matthew. If Tully goes into production, what is the forecast for the share price?
That's,
those are loaded questions.
Talk to Dwayne.
Talk to Dwayne. I think you can look at what was it, Grok or ChatGPT. Actually, will give you.
Yeah. These are
questions we all want answers to, for sure.
Yes.
Yeah.
I want to focus on.
I can say this though, Nicole. Yeah. One thing I can say towards that is, if you look at what we've done here, we've done a 1 cent financing, we've done a 2 cent financing, and we've done a 4 cent financing, and we've stripped out the warrants now, on purpose, and so this will help the share price. Okay, and I'm not going to speak towards the share price itself, but when we start doing these things and understand what the capital structure is about and the access to it, us stripping out the warrants and raising money at a premium helps.
Yeah. And there's a very simple mathematical formula on share price. Gold price times ounces is gross revenue. Take all-in sustaining costs from 5 mining companies that are operating today, average that, take that off the ounces, and you'll get a net income, and you can then extrapolate from there what the share price is. That's a fairly easy piece of math to do, and I offer anybody listening the opportunity to do that themselves and judge for yourself.
There you go. Matthew, I hope that helps. Michael, I feel like you're going to want to answer this one. I know it's close to you, but DeSantis, we're going to pivot over to DeSantis for a second. More extensive historical information coming right at you. I know you're waiting for it to close still. So what are you planning to do to get to know the property? What are we most excited for to get that into your hands?
Yeah, so we haven't closed that, but the immediate deal for us is a $100,000 payment and $400,000 worth of our stock. And that's on a VWAP. It's protected that way. And that gets us 100% of the project. And DeSantis is made up primarily of patent and mining leases, as well as a handful of claims and some claims below some of the patent. So it's really a strategic play here. I can say this. I witnessed here this morning a piece of paper that came from the hydro company wanting to talk to landowners along the Destor-Porcupine Fault. And guess what? They need to bring their power lines right over top of DeSantis. That's this morning. I mean, this is what happens when you roll into something that you believe in, because it further comes to you. I mean, companies spend millions of dollars in remote areas of Canada, and I've witnessed this firsthand, hundreds of millions of dollars to bring power in. So it's going to be over top of us. Mm-hmm. And so the historical part was done during a time frame Errol alluded to when, companies were looking for ounces per ton, and you saw that in the Northwest Territories that was done in the 1930s. And they found it in Yellowknife, in Giant, and also in the Kamienko mine, the Con mine. So this is not today. Ounces are no longer. That's 32 grams per ton. So we're into a different territory here, and so we don't know what's underneath. We have 196,000 tons of material that's been brought to the surface, and that is waste rock, that is tailings, that is development rock. There's 2 shafts on the property. They're both shallow in a sense, but I mean, it's a sizable property this way. And oceanfront property, it's right on the fold, and that's where that gold can hide on there. I'm not a geologist, but the interpretation of that fault is also being looked at as a modern way to look at it, where things have shifted to the north. Things like this, and I'm talking to the people that are in the know of this, and so you just couldn't let this one leave you. I mean, mm-hmm. it surfaced itself, and so you have to close on this. But that's been our focus, is looking at the Timmins camp, And, we're right beside Galleon. That's another thing, and Galleon was going to do a production story very similar to Tully, but, they captured some money from Pan American Silver. I think $31 million here just a month and a half ago or 2 months ago. So neighborhood, and it just keeps on driving. There's a lot of work that can be done on DeSantis. I'll start by reclamation. I mean, 196,000 tons of material. Most buildings are down on the ground, so we've got scrap steel all over that property. It's right near the roads. You drive into this, and so I would say more advanced exploration, but probably simple stuff too, because if you look at the DNA of this property, I mean, we were with the office that was a prior big mining company that owned it. We were with them here earlier this morning, and so it's been in bigger hands, and we do have a new partner on this too, out of this deal, and this is Metalla Royalties. They got a 1% on pieces of DeSantis, and when the news release came out on the 1st of December, it came out at 11:40 a.m. I think it was, and 20 minutes later, I'm having lunch with Metalla, and they didn't know that I was coming in with a news release in my hand. Well, they were elated. This is one of their first investments that they made, and so they paid significant money for this 1% NSR among a couple of other NSRs. So in that camp, they're completely elated. I mean, these are good partners to have. Day one, we walked into this, and things start waking up every day. I'm getting phone calls. We have some boots on the ground in Timmins and looking at things and lots of data to look at.
I want to ask my last question here, and it's something that you teased earlier during the presentation, but it's about your cap table. So you have 400 million shares outstanding, or somewhere in the realm of that number. And earlier today, you told me it doesn't matter. So why?
Well, go ahead.
No, don't.
Okay, so it doesn't matter, and hear me out on this. Look at what's available to buy today and yesterday and the day before that. It trickled down. It's stuck. So we know that the float is in strong hands now. So our job now is to look at mechanisms that we can release stock into the market, and not by force. And also, new stock coming on has 4 months holds. I mean, we're not going to get necessarily brought into life financings, and they're not going to be serial, but we do have $10 million worth of warrants that are exercisable here at 5 and 7 cents. So, I mean, that is a natural thing to look at for us. This is like having an ATM at your fingertips. Mm-hmm. And so this is good G&A money going forward. That could get stretched up over a beautiful time period. It would also help in doing M&A work if that was the case. But it can be the equity part of the demand of the debt instruments that would be required for Tully. We're not talking a lot of money here. I'll wait for the number to actually come out. But I mean, that part is the significant part of that.
Well, we're in the last few minutes. Sorry.
Yeah, go ahead. Nope. Well, it's about market cap, not market price. Right?
Floor is all yours.
Price of the stock isn't important. It's about what the market cap. What's the overall value?
Right. Well, we're in the last few minutes of the webinar today. I do want to hand it over to both of you. Give us any last thoughts that you want current investors to know about, potential investors to keep an eye open for, kind of lay the land.
For me, as an investor, you look at what's happened. We've had started in September, our low was half a penny. Today, I think we hit 5 cents. So that's a factor of 1,000.
That's 10. That's a 10 bagger.
10 bagger.
With no drilling.
No drilling, no work on the ground. What's the compelling thesis here? As Matthew needs to do the math on a production scenario. What does that do to overall market cap and share price? And then I think you got to look, with all due respect to our competitors, You have to look at what the potential returns are that can be derived from Loyalist versus our competitors. And if you think that's compelling, well, you should get involved. We want you on board. If it's not, that's good too. We're fine. But we think this has extremely compelling returns over the next 12 months.
When you take a look at Goldcorp's Porcupine project, which has gone through iterations with Newmont when they took over Goldcorp, and now that project has been sold to Discovery Silver, and that's a combination of 10 or 12 mines. That the number's not important here, but these were worked out mines, and if you look at the drill results of our big neighbors there, every one of those mines delivered 100-gram meter hole gold showing. So and so the power's still there. I mean, these aren't worked out mines, and so we have the one that wasn't in the mix. It wasn't the Timmins 12. There's a couple that have escaped here, and DeSantis was one of them. So I'm going back to DeSantis here. So it's the focus, as Errol said, is the market cap, and really when we started, with the reset of this company, I mean, our hands were behind our backs in a sense. In the days of late spring, early summer, I mean, no return phone calls. This is when I said I wanted to get involved. And so I showed up at that time frame. It was $1 million market cap, half a penny. And I told my colleagues, I said, this is where you can take a $500,000 property. I mean, Tully was a $500,000 payment, and turn that into $10 million market cap overnight. Well, I was wrong. It took 3 months, and it was 15 million. So that's what we did. So execution, we worked hard at this. And so we'll continue as we are.
It's been a wild ride for you guys the last 3 months and even this year leading up to it. So I'm very excited to stay in tune with the company and with the story into the next calendar year. I know lots of stuff are happening. For everybody on the line, thank you for joining us live. For anyone joining us on the replay, thank you for watching. If you do have any questions for the management team, please head over to loyalistexploration.com. There is a contact page there. And if you want to watch the replay, it'll be on all over their socials and on their website as well. I, once again, am Nicole, and I'm joined by Errol Farr, the CEO, and Michael Stewart, advisor. Thank you for watching.